The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. This is Billy Ray Valentine and Lewis Winthorpe III reporting from the offices of Duke & Duke on South Philly in Broad Street. Folks, Clarence Beeks, the guy who gave the orange juice report to the Duke brothers, he has to take some, I believe, some lessons from the ECB. Today they came out and said they didn't going to raise their rates. And then about 8 minutes later, Financial Times came out and said they made a mistake. They are raising rates. And that's what's caused this craziness that we've seen. I posted in the chart for the DAX because I thought it was going to be something really really spectacular to look at. You can see it in the charts here. The number that you're seeing there at 11,320, that was the exact 61% retracement of the whole move in the DAX from the high that we made back several months ago. I mean, to the exact tick. The high was 11,325 for the ones that like the Fibonacci numbers, whether that means anything or not. We're expecting a big day either, but around December 4th. This is December 3rd, so this might be it with this kind of volatility. I don't know. It's really crazy. But if you look at that DAX chart, you're not going to believe what the low is, folks. The low is 1,000 points lower down there. It's at 10,700. I believe is where it got to. Unbelievable. I mean, it just, just incredible. 3% swing in a matter of minutes. It was moving 150 points in 5-second increments. And that's the, it's really, really amazing. And then we have the euro. The euro went down all the way to 105.20 and rallied over 370 pips, almost up to 109, which was the exact 382 retracement of the entire move in a matter of just a matter of a few minutes. I mean, that's how crazy it's been. I mean, I've been doing this for a long time, and when I see craziness like this, I just step back and say, have some fun, boys. And I look at the numbers to see what's going to happen. But boy, you have to. It really gets to be a move. But the DAX has dropped 3% in a matter of. But the swings that it's had have just been unbelievable. I mean, I was watching it move 100 points in the DAX in a matter of maybe 20 seconds, and. It's really. No, I'm just saying. Jim's asking a question. He can't use the 5-second charts. Well, I was going to make a funny joke here about using 10-second charts, but I'm not. I know that the nearest I can do is a tick chart, and I don't even do that. So all I did was do a 5-minute. But you can see the swings during that time. What you can't see is the up and down in between that point, because the bid and offers on that must have been crazy. I happened to be chatting with some folks in London, and just to see if the prices were correct, and they were. I mean, they were. This is equivalent to the Dow Jones moving about 100 points in about 2 or 3 minutes. That's how crazy it was, up and down. So it's been a little wild over there, as you can see. So just to keep in mind that we got this big cycle that's due here. This might be it today, given the fact that what we've had. I don't know if it's due to that announcement or not, but it appears that everybody is, is going to be, whether it's going to be up and down, you'll have to wait and see. That's all we could do. We might get one of those days in the S&P. We haven't had one of those. In a long time. So we'll see what's happened. Okay, now we're having some pretty good swings in the S&P. We've had about 20-point swing in the S&P. Well, he had 30 points, went from 2105 down to 2075, and we're rallying, quite a bit. So it's going to be interesting, to see what happens with this as we go through. The bonds have had a big breakdown. We thought there was going to be some resistance up there at 157, and they've dropped 2.5 points very, very quickly. So even though they're lowering rates over there in the ECB, looks like we're raising rates over here. That's what it looks like it wants to do from what we're watching on some of these things. We've had a big move in gold, and a big move, $17, which is the harmonic number in gold. The two harmonic numbers in gold are $17 and $34. We've said here on the show here, what we were looking for in that gold to get down. 1 second, please. Excuse me. Right around the one. Right around. Wow. 1 second. There we. Wow. Just a minute. Let me see if this is working a little better. I don't want to get into that horsiness that I've had. But we've had some really big moves here in gold. Last night when I was watching it, this was early in the evening. We went below that 500 and 1050 level during the move down. And what I wanted to do is just show you what happened. Gold went down and made the exact 1.27 of the low from the 27th of November. And then we had a rally that got up to 1161 today, which happens to be exactly 61% retracement of the high that we made on December the 1st at 1075. We haven't really gone very much from that sign. See, gold is not moving nearly as much as the euro. I mean, the euro is just going nuts. And euro's real money, folks. That's real money. That's the Forex market. That's not the futures. I mean, that's futures. The futures we measure in millions, but the Forex market you measure in billions. And with the euro, you could even measure even higher, probably into the trillion, maybe 1 trillion or something. But we're having some incredible moves in some of these things, so we want to watch what's really going on with some of these things. So keep an eye on that for sure. Actually, I was quite shocked that we were looking at some of these things here that were just absolutely mind-boggling. Now, I wanted to see, I covered the German market. There's so many things. Oh, I got a question here. We'll just do this first, and we'll just go ahead and we'll do the Apple, because I have a question about apples. It's our most famous stock in the world. Give me a second here, boys and girls. I've got oh dear, don't tell me I'm going to have a little problem. There, we don't have a little problem. We just have a little technical problem. Okay, we're going to take a look here at Apple here. We've had the the big ABCD down coming into August, which we were expecting that. And we at the time we thought Apple would be a good buy at around 95, and it opened at 91. Then we rallied up to the exact 786 on Apple up on into November the 2nd. We came down exactly to the 786 on November the 13th, and we went exactly to the 786 on the upside, and now we're starting to back off a little bit in Apple. So Apple is in a downtrend, folks. It has been in a downtrend since May the 19th. Now that's when we had that Mercury going retrograde and the new moon. So I still think we're going to be going lower here. We'll wait and see. Today will be a key day, because if we close badly in all of these markets, that's going to solidify the fact that we have made this cycle high probably on December the 3rd, maybe December the 2nd. But that's what we could be looking at, and we want to be able to tell us that's what's really happening. Now, the next chart that I want to show you is the chart of the Dow Jones Transportation, and that's very important because that's how they ship the goods. We were down 200 points in the Dow Jones Transportations yesterday, which was quite a bit. We were only down 150 in the Dow. And so all we have to do now is to be down about another 50 to 75 points in the Dow Jones Transportation, and we're going to be breaking that 618 and 786 support line, which also happens to be the trend line of this whole thing to the downside. So I would think we would be starting to move down. With the volatility that we're having in everything, that tells me that there's something cyclical has hit. I mean, that's just not the news that we have going on. I mean, the news might be the catalyst behind it, but it's got to be the cycle that happens to be in there. So that's, really all that I'm watching when I'm looking at some of these things. So main thing we'll be able to see, see how we're going to be doing, some of these things as they go through. They're having, hold on one second. I have to do a quick little technical thing. There we go. I had to move over. Actually, I'm trying to do a couple things here at once, and I don't do a great deal of what do they call that thing, multitasking. I don't do too much of that. But anyway, we want to watch this Dow Jones Transportation, because if we close badly today, this is really a bad sign. And the reason for that, folks, is if you look at that Dow Jones transportation chart really closely, you'll notice that we hit the exact 61% retracement 2 weeks ago up there at 83.66 to the exact tick. I mean, it was just absolutely spot on. And now we're ready to take out the 7.8. We've already taken out the 786 retracement of the low of November the 16th. That in itself is a very, very bearish thing, and that would tell us that the Dow Jones is starting to go down. Now with the Nasdaq, the S&P, and the Dow Jones Industrials, they're not even close to that. But the Dow Jones Transportation is important because this is how they ship the goods, and we're at Christmas time, and Amazon's selling everything but bobby pins, and I think they sell those too. But they will tell us that we're really looking at something that could be, quite quite negative would be the thing that I would be watching. So we want to watch that just a little bit closely. So that's what I see in Apple. I believe we're going to see Apple below triple digits without any trouble at all. That's the way it looks. The way it looks to me. Remember, this has been going up. Stock market's been going up with about 150 stocks. That's the bottom line. There hasn't been any more than that to watch it. So that's the main thing that you want to keep in mind. What we're watching now. The gold and silver have tried to hold this level, very, very strongly here lately. I wanted to bring out the silver chart to let you know that we did go down and we matched those lows from last August. And we have not taken out the low from November the 13th as of yet, but we're not very far away. Now, we've done that in platinum, and we've also done it in copper, and we've also done it in the gold market, but the silver market has held up relatively well. So we need gold in order to reassert the trend. You need the gold to get above at least the 1065 today. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, boys and girls, we are back from the offices of Duke & Duke here in sunny South Philly. First of all, I wanted to go through the platinum chart. I know we don't trade this very often, but it's really a good indicator of the metal markets. We've been waiting for this drive to a bottom pattern to occur down at the 804 level. We have not, rallied very much. We have taken out yesterday's lows in platinum by $1 or so. We haven't really gone much past that. Then we've had a pretty good bounce as we've had in the gold market, but there's a chance that we're not going to make this 1.618 in the platinum, because if gold can hold above, the low we made last night at 1045, then we've got a chance. But gold could go down one more time and make another leg down at the long-term 1.618 number at 1069, and the fact that it could only rally $17 an ounce this morning was really quite disappointing from the gold side of the bullish side, considering that the euro rallied well over $3,400, and we didn't get that happening in the gold market at all. So, and I know gold is not the euro, but it's still money, so you have to look at it, folks. The foreign currency markets are so big; they're thousands of times bigger than the stock markets, and the futures markets are so big they're in the trillions is how much they trade there, and so it is a real markets, real money. So it's very important to watch that, and to have a swing like we've had today in the euro is quite amazing, because it made a beautiful ABC down on looking at the half-hour chart down at that 105.20 level. It was right at the time when Mario Draghi was getting ready to speak. And of course, it's really difficult to do anything when those guys open their mouth, but you don't think that they know anything, do you? My goodness, I wonder if they would have actually made a mistake and said, no, we're not going to change rates. And then a few minutes later, they came out and said, yes, we are changing rates. So that was the the big shock. The German DAX has had a 6%, I believe, from high to low, a little better than 3.5 or 4%, and then it's rallied back to almost a 61% retracement of the whole move down today. That's how wild some of these markets are actually acting. So you want to be careful today, and of all days, for God's sake, make sure you use a stop today, because it can really be crazy, and you don't want to stand into that without any trouble. Believe me, it gets to be pretty tough to try to do that. You don't want to mess with that. So we'll just watch and see how it is. But today's high in the euro was exactly to the exact tick, within 4 pips of the exact 382 retracement of the high we made 4.5 weeks ago. So and if that's it, and it doesn't go any higher than that, we still have an objective in the euro of this rally really doesn't mean a lot, because it's a quick short covering rally. But if we look at the you'll just see where we are here for just a second. On the long-term picture, if we look at the weekly chart on the euro, we're still looking at a market that we want to see go down to the 105, or excuse me, the par level, between par and 99. And we've been mentioning the importance of this level at the 105.60 is the 105.40 to 105.60 level, and we got down to 105.20 this morning, and then we've had this big rally, and all it does is it just it takes away the oversold condition that we've had. And when the market goes up that fast, 350 pips, go back on your currency charts for the euro and see how many times you see that happening, because it is a major outlier event. You just don't see this occurring very much. It just is not in the ballpark. There was a comment by Janet Yellen yesterday. I actually couldn't believe what she said in the markets, because she was mentioning that she was seeing a lessening in deflation. And I said, I wonder if she ever looks at a commodity chart, because you're seeing gold, silver, copper, platinum, wheat, corn, beans. All of them have been going into the sewer. And all we're seeing now is the fact that she says that there's no deflation out there. They're going to raise rates. They have to, given the environment. What the market's telling them today, they better do it quickly. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'm going to switch gears here and talk a little bit about the commodities market. This used to be the old commodity show that I had when I first started doing this for TFNN 7 years ago. But what we're looking at now is a chart of the DBA, which is the ETF for the agri-futures, mainly the grains, oilseeds, cattle, that type of thing. And it doesn't include the gold and silver and stuff like that, which we already know what they're doing. But if we look at the lows from 2008, we've already taken those out, and we've got a potential for a big ABCD forming in here, about another 5.5% lower, which is certainly possible in this particular ETF that we're looking at right here, because it is a beautiful ABCD pattern. So we're thinking sometime, I am thinking sometime in early 2016, maybe around middle of January, we'll be looking at something pretty interesting. Now, one of my favorite things to trade, and also one of the favorite of our good friend Rich Anderson of Anderson Capital Management, is the wheat market. And if we take a look here at the wheat market, this is I made a mistake on this, folks. This is not December wheat that we're looking at here. We're looking at March wheat, because December wheat will be into delivery pretty soon. So I mismarked that this morning. So this is the March wheat contract. Right now we're trading around the 467 level, and the ABCD pattern will measure down, and also the 1.618 measures another 16 cents lower down to the 451 level. The reason why this is so important is because of the harmony that you have here. If you'll notice the ABCD structure on this March wheat, the rally back that took 5 days into right around Thanksgiving time was an exact 382 of the high that it made back on November the 4th. So that ABCD extends down to the 1.618 level at roughly 452 per bushel. So you really have to be prepared to buy wheat at 452 and actually try to be a seller of it if it does in fact move to the downside, or rallies a little bit. And we're very oversold because we're down 8 or 9 days. So if we get a rally here of 10 to 15 cents, you'd certainly want to look to be a seller in wheat, because the target certainly is apparent at the 452 per bushel level in the wheat. So these are some of the things that we're looking at into early 2016. And we'll see how the rest of it starts to move as we go through some of the things that we're watching. Okay, all right. Now we will be looking here at some of the other things that we're watching. Just give me a second. We're going to have some pretty wild moves here. The bonds are really getting hit really hard, folks. We're down 3 handles in bonds in 30 hours. That's a huge move. That tells you that interest rates are going higher, regardless of what the Federal Reserve thinks it's going to do. Interest rates are going higher. So just get ready. If you're getting ready to buy a mortgage, lock it in now, because it's not going to get any easier than where we are at the present time. That's the way it looks from the cheap seats here on the south side of Philadelphia. Anyway, we will be traveling here pretty soon, and we'll be going to go seeing our grandkids back in Philadelphia. So the shows I'll be doing will be from back east, coming in about a week or so, which is all fun. We go back for the holidays, which will be a lot of fun. The cycle date that we're looking at, it's got to be today, as near as I can tell, because with this kind of volatility, that's what usually you see. And so I'm assuming that that's what, in fact, what we're looking at when we're seeing some of these things here. So just be aware that this is what happens when you see some of these moves occurring. That gets to be quite dramatic, and we are seeing. Look at the bonds; they're down 1.5 in 2 hours. That's a monster move to the downside, folks. That means higher interest rates are coming. I wouldn't be surprised if the Fed did something today just to see that they wouldn't do one-upmanship with Mario Draghi's group. That's what I would look at it anyway, to see if that's going to be the case. So, and the euro move is just amazing. We had 300 pips up, and then we had 100 pips down, and so it's been a real wild ride over on that side of the market too. So all of that means a lot. But the bond market is a huge market, folks. It's the biggest market of all the commodities that we trade. Notes are by far the biggest, and then bonds right after that, and they're much larger than all of these indices that we look at. So you're talking about serious money here, and to see them drop this much is a big deal. So we'll see what happens with this. Now we're starting to weaken a little bit in the stocks, and if we get much below the 2065 level, that would really, in the S&P, that would really give us a chance to say that, yeah, this cycle high is most probably come in. We've got we had this rally back, rallied right up to the 61% retracement up at the 2087 level right after the open, and now we're backing down to the 61% retracement. So all of that tells us that we're getting close to something really dramatic happening. If it's going to be as dramatic as the currencies and the bonds, don't be excited if you don't see the Dow up or down 200 points, because that's going to be nothing compared to what we're seeing in the volatility in the other markets. That's the bottom line of what we're going to be paying attention to. So that's what I'm seeing. This cycle date is a big one. That's all I can say. It's should it be a pretty good size? We'll have to wait and see. What the trading gods are going to tell us. But right now, that's what we're seeing across the board here in some of the things that we're watching. The gold market has really done very little. We've, like I mentioned, we rallied up to the 61% retracement of that last high up at the 1074 level. Then we dropped $34 down to the bottom at the 1045. So it's right in this zone here. We've got to get gold above the 1065 level in order to get it to move, strongly to the upside. If you happen to be in the gold trade, we bought it pretty much right on. Just keep your stop at break even and close your eyes, put your sunglasses on, and don't look at the machine, because it's going to be probably blinding when you see some of the things happening. The problem that you have here in the stocks, folks, the way I see it, is that we don't have enough doors open to get the people out of the stocks if they decide to sell. It could really be nasty. You've already seen what could happen in the DAX today. A 3% move in the Dow Jones is that's 520 points. We haven't seen a 500-point move in the Dow in several years. So, I don't know if we had it. No, I don't think even during the August drop, I don't think we got down 500. We're only down 400 in the August drop. So, and I've always mentioned that we will get that, because the biggest move was around 300. I believe 400. So you multiply 400 times 1.618, that takes you out to 650. So we should see sometime between now and I imagine towards the end of till the end of the year, this month, we might see a 650-point move to the downside in the Dow Jones. There's always that possibility, to see if that's going to be the case also. So let's just wait and see what's happening. We've now exceeded the 786 retracement of this last rally that we had on the downside. We've got a hold here in this S&P right around where we are now at the 2076 level, because if we don't hold that, that sets up an ABCD pattern down to the 2065 level, and that could easily be a spot where you're going to run into some problems with selling if you come into that. That's pretty much what we'd be watching on that. So we'll keep an eye on it just to see what happens, and we'll wait and see what happens if it does go a little bit lower, and then we'll find a place to see where we could get a short on if we do see that. 1 second, I've got to change something here. There we go. I'm trying to do a trade or two as I'm doing some of these things that I'm watching, and I'd like to just keep track of what's going on, with some of these other markets that I'm following along with. The question that someone's asked me is, oh dear, I made a mistake. Hold on just a second, boys and girls. I've got to change an order here. Hold on just a second. It'll only take me a second. There we go. Okay. I can't put it there. I got to put it right there. Hold on. I hope our friend Basil comes on, because, boy, I'll tell you, folks, it's been a long time since I have seen volatility like we have right now. I mean, it's just the euro move actually startled me, because I was preparing the charts using the DAX, and there was a lag between what was happening in the euro and what was happening with the DAX today. But boy, when the euro took off, the whole world must have been short the euro, which that doesn't surprise us at all, because we've been talking about that ABCD structure that was down there at that 105 and change level, and but I didn't think it would rally 360 pips in a matter of about 2 hours. So and we did get up to the 61% retracement of this thing, so it's going to be the 382 retracement of the whole move down. So that's another one that we want to be watching very, very closely here, because if we get above 109 in the euro, that could be a real game changer. That means that maybe this bottom that we were thinking was going to come in at, the old bottom was 104.50. We got down to 105.20. It doesn't make any sense that, that it would miss that bottom. If we'd taken that old bottom out at 104.50 and then done this, yeah, there's a possibility. But the way it sets up now, I just don't see that's going to be the case. Now the Nasdaq is starting to weaken up a little more than the S&P, so we're starting to move down below the 786 already in the Nasdaq, which tells us that probably the S&P is not very far behind. So we'll watch that very, very closely. Okay, now. Boy, look at the bonds. Gosh, folks, you gotta pay attention to bonds, folks. We're down almost 4 handles. This is an outlier event in the bonds. I mean, this is really we're getting into. Pay attention today, boys and girls. There's a couple of markets that you got to really watch. This euro and these bonds are telling us that cash is something's happening. I don't know what it is. It could be that this big move that we're looking at here could be the one that does it all, but you want to be very, very careful, because these bonds have crashed 3 handles in an hour. This is huge. We mentioned yesterday, that we were up at that 61% retracement. We went above it by just a little bit, about 12 to 15 pips, and now we've broken 4.5 handles. And that's points from 157 to 152 and change in a matter. And this is real money. This is bonds. This is the mom and pop. This is 401ks. This is serious. Interest rates are going higher. That's the bottom line. There's just no other way that you can look at it. Now we've broken below the 786 now in the S&P. That sets up the target of 2066. That'll be the somewhere between 2066 and 2062. The old low was at 2065, if you remember, just a few days ago before we had the big jump up. So this is going to be real interesting. I just wonder, maybe is there a possibility today that maybe if this is a big sell-off into tomorrow, that it might be a bottom? That this might be a major cycle bottom occurring. We have to, maybe, follow that in, because it could either be within a day or two of what we were talking about, the second, third, or fourth. And oh dear, they never make it easy, do they? But we'll watch it real closely to see how it goes along the way here. But at least the gold market has slowed down a little bit. It's not doing anything to make anybody too excited or anything. So we will watch that a little bit also. So that's about all we can do, is just sort of follow this along and see what we're going to be doing here very, very shortly with these things. But we're only a couple points off the bottom. In the S&P, we got down to 2072. The Nasdaq is very, very close. We got the Dow down about 75, and some of these Dow stocks haven't even opened yet. So that's going to be an interesting thing to keep an eye on. So we're going to take a little break here. We'll wind it up, and we'll be right back.
Is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we are basically down quite a bit. Now, the bond market is not down 4 handles. It's only down 3.5 handles. The junk bond ETF that I look at, JNK, and also the HYG are just about ready to take out the double bottoms from August the 25th. If you remember, that's when we bottomed before we had the really strong rally. We want to be watching, what's going on, with some of these other markets because it's basically money flow, particularly the euro. And gold. Gold is just has really done very much. It's rallied from 45 up to 62.5, and now is pulling back to a 61% retracement. So it needs to hold. Gold needs to hold the 1050 level Otherwise, you could be seeing, a collapse in some of these other things. But we live in interesting times, so make sure today, if you've never used a stop before, this is the time, this is the day that you want to be using a stop, because this is where you can get yourself into a whole lot of trouble if you're not using a stop in market conditions like this, because when you can see the euro, which is really money, moving 300 pips in about an hour, you don't want to get caught into that, because it might not stop at 300 pips. There's no rules over there, so you want to be watching it. We're making new lows in the bond markets. Just about every time you see a click up there, it's making new lows. So nothing is really calmed down as of yet. If the bond market calms down, then the stock market can have a pretty good rally. But until that happens, it doesn't appear that it's going to do that, because higher interest rates are here to stay. Whatever the Federal Reserve decides to do or not, the bond market and the note market has already told us that that's what's happening. Remember, the notes could only make a 382 retracement when we were making a 61% retracement in the bonds, also. So live every day in an attitude of gratitude, and may God bless and do something good for someone who has a lot less than you today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.